Hey everybody, Matthew Cole with West Shore Mortgage here in Sacramento. If your LTVs and DTIs are getting mixed up with your CTCs and 1003s, pay attention because we're going to go over all that crazy stuff. If you're a real estate agent or even a buyer in this industry looking to buy a home, make sure that when you're talking with a loan officer, they don't just start spitting all our crazy jumble mumble at you, because we got a lot of acronyms that we use for different things: DTI, LTV, CTC, 1003, all kinds of different things that we use. So when you hear someone talk about what an LTV is, that's basically going to be your loan to value. So it's your loan amount versus the value of the home. Or when you hear someone talk about DTI, that's going to be your debt to income ratio, which is going to basically take into consideration all your credit card debt, plus all your mortgage debt, plus any other mortgages that you have, versus your income. So if you make 100 grand and your debt is 25 grand, you're at 25% DTI, debt to income. So make sure when a loan officer is explaining these things to you, that if you get caught up getting these acronyms or emails sent over to you and they say your DTI is this, your LTV is that, make sure that you either ask them to break it down for you and not talk like you guys know what you're doing for a living in this industry. If they don't, then hopefully this helps. More acronyms that we kind of use or we're going to talk about is your CTC, which is the best word in this entire industry, which means that you're clear to close. Basically, that's going to take in that you're all done. Loan's been started, it's been finished, your loan docs are going out, you're signing and getting keys. Someone sends you out something that says 1003 or whatever on it, it's basically just your initial application that we're going to take that's going to have all your breakdown of your information. Also, a couple more you got to look out, which are the most really kind of important ones, are going to be your LE, which is going to be your loan estimate. Your LE is going to break down your DNA of your loan, your purchase price, your loan amount, your down payment, your rate, the property address, your taxes, your insurance, your funds to close, your breakdown of your closing costs. You're going to get the LE, or the loan estimate, a few times in this transaction, once at the initial loan disclosure process and once when your locked loan estimate goes out. Another one, which is extremely important, is going to be your CD, which is going to be your closing disclosure. This is going to be sent out to you two separate times. Once to start your closing period, and then once with your closing docs. The one with your closing docs are going to be the most accurate closing disclosure you should get in this process. It's going to be dialed in, or it should be. The initial one you get may be a little bit off still at this point. It should be fairly close, give or take a little bit, but your CD at the beginning and your CD at the end typically should be kind of in line with each other. So if you're working with another loan team, or if you're a realtor or a buyer and your loan officer is just spitting words at you that you're not understanding and doesn't take the time to explain it, let me know. Give me a call. I'd love to go over these things slowly and make sure you understand the process from A to Z, and make sure you don't get left behind.